Hey there, chart friends. Lamont here from Chart Guys, checking in on the electric vehicle sector and a couple of them battery names. So, starting off with nope, starting off with Tesla, our big dog of the sector. We have been keeping an eye on this TD development here. So on the monthly chart, we have a perfect setup, perfect 9 cell setup that is potentially forming here. So if this close were to be over this close of 705.67 and be a bearish reversal candle, that would be a pretty good indication that at least a little bit of short-term consolidation is underway. So there are not too many examples of it on the way up. There was really only this one perfected 9, but it didn't get the 8. And so it wasn't as high conviction as a perfect 89 setup. And it's actually negated quite quickly because you don't get consolidation at all. You could just get a green 1 continuation and then you break the risk line, or price broke the risk line. So essentially negated this consolidation structure. But I do believe on the weekly time frame, there you go. There we go. The weekly time frame, however, oh wow, I forgot about that one. The weekly time frame has offered a bunch of these pretty good signals. Now, this is not a reversal candle, but it's certainly not terribly bullish either. And because we are not able to get over this risk line, that we don't, a TD trader would not anticipate more upside yet. So we're getting to the point on the weekly chart where the consolidation period is anticipated to be ending soon. So the weekly time frame is probably, regarding macro, probably the most important time frame right now to see how that monthly will shake out. So you see when you get a perfected 8 and 9, you typically get some consolidation. Even this one, right? Technically, these two bars were consolidation. I mean, it did lead to some downside, but the idea is pause is in order, and it's once we get over the risk line again. Once we get over this risk line, is when the bulls get going again. I'm just looking. Just want to look back for any other signals, just to get an idea of reliability on the weekly time frame. I'll tell you the truth. It's not as ideal as I like it, but you know, mathematical formula is mathematical formula, right? So the idea is the TD is really just a way to measure trend based on closes. All right, so the daily time frame. Now we're digging into our, regular weekly stuff. We are remembering that we are in this large channel structure, okay? That we're just grinding up. Okay, we're in between the two standard deviation bands and 3 from the mean. So just something to carry forward, right? Because we're going sideways, we are making enough overhead space in this channel to make another leg up, right? And so we're watching this confluence zone here where we have the daily risk line at 950. We have the R2 for the month up here at 984, and then of course we also have this channel structure, the potential trend line resistance of it. Okay, so if Tesla is the pop of consolidation, maybe we would look up here for some potential pause. Okay, not necessarily a dump, but some pause. Okay, so we're range bound. There's not much change in that regard. And as long as we're range bound, I only really care about making plays off the range. So if we can come down here and test the low 800s in hourly oversold conditions, I think that would be a good play. So basically just bottom fishing and top fishing, right? And this last top fish, again, top fishing, these names a little aggressive with the news overhang being typically bullish. But technicals are technicals, right? If you're comfortable with it, that's fine. So this one gave you a little bit of trade, but not terribly much. So ideally, the bulls just want to see a bull break, right away. So if the bulls can hold this daily higher low here of 833.42 and break to higher highs over 880.50, ideally breaking the all-time high resistance as well on the same leg, so 940, then they change that daily trend, and then the weekly higher low will technically have been confidently set here. So it's not yet. We haven't gotten that daily trend change yet, even though this is quite a lot of bounce. We are still range bound. So that's pretty much all we're looking out for. And let's see the hourly trend. The hourly trend, this is enough pullback where we would anticipate an hourly lower high under 877.77. And so if bears can defend the 877.77 level and punch it down below the support of 854.75, they'll change that hourly trend bearish and then have bulls scouting for a daily higher low with anything over 780.10 being one. NIO. All right, so let's start with the macro. So NIO monthly got that 9, imperfect 8. We are still anticipating 1 to 4 bars consolidation, and the go sign for TT traders would be 84.91 ish. If we can get a close over that risk line on the monthly time frame, that would be a very good look. Weekly chart is bumping up right off this risk line, so this actually looks pretty good. Honestly, it looks pretty bullish. Just because whenever you consolidate really tightly under the right on the risk line, threatening to break it, it's typically a good look. Right? Normally, for any kind of rejection, right? You typically want to see it as violent as possible, right? Have confidence in its strength. So right now, the price is just kind of wedging, right? It's not a perfect wedge, but certainly it can be drawn that way. Right, so let me clean this chart up a bit. What don't we need here? I guess we don't need that. So many of those. That's for now. Okay, so yeah, you could call it a wedge, right? You have a bit of a descending wedge here. Okay. And we also have a range, or at least we have this previous highest close that bulls have been continually playing defense off of, and the zone of interest that we use for this little higher low set up on Thursday actually came into play both days. So, hopefully you got a nice bottom fishing play off of that. And now technically there is a daily higher low and higher high, but because we're in this consolidation structure, we're not putting that much faith in it. There's not a lot of follow through on it yet. And I would say, if you're an aggressive bull looking for a play off of this trendline resistance, if you can get hourly overbought, I don't hate that. I don't hate that. Especially you can see that there's like a big volume spike here at the 63 level. So if you can get hourly extended into, like, maybe let's say do it like that, right? So that you can account for this a little bit more. Something like that. I don't hate that. And ideally, because of, again, how bullish the sectors are, ideally, you're using this more as like a hedge. Take profit, or maybe just sell some covered calls. I don't know, something like that. You know what? I should maybe think about that. I don't. I was distract myself with my own trades. How selfish of me. I apologize. All right, so we are just watching this hourly trend, right? Just watching this hourly trend here, and this bounce. Technically, this is an hourly higher low and higher high. So we can be pretty confident that this daily low has been set, this daily higher low has been set, but again, doesn't mean that we can't just get a really fast rejection tomorrow. So, what happens now is not necessarily suggestive of what's going to happen next. That's something a lot of people get caught up with, right? Especially with the patterns. They feel like, oh, well, this is a bullish pattern, it's going to be bullish. That's really just not the case. The pattern just offers you some context, and you still want to develop a directional basis, a thesis based on more than just, okay, well, this is a pattern that I recognize as being bullish, because I mean, it's just statistics, right? Like that's all that recognizing the pattern does for you, is gives you a little bit of a statistical edge, right? For example, I think rising wedges only break down like 67% of the time. So what about that 33% of the time, right? You're gonna get faked out if you just blindly trust in the rising wedge, right? So anyway, just something to think about. Yeah, so checking that hourly trend. Hourly trend last higher low here was at 56.16. Whenever we pull back, the bulls will be looking for a healthy higher low over that. And if they can maintain that defense of this level 56.16 and break the higher highs over 59.52, then the bears will continue to look a little bit higher for that potential top pushing play. And I like it, something like that. Something like that. Should write this down. Hedge. Okay, whatever. Alrighty. Yeah. I sell some 70. Okay. Okay. Workhorse. Oh, interesting. Workhorse came into the zone of interest marked off on Thursday. But let's start with the big picture as we always do on Mondays. So Workhorse just kind of grinding up on the monthly chart. It is in all-time high territory. All-time high territory, just kind of grinding upwards. Was in this kind of monthly wonky flag for a little bit. Now trying to see some follow through on the weekly time frame. Just a pretty healthy stair step deal, kind of. Well, I mean, it's more so sideways and now breaking out of the range. I suppose, and I might have this already drawn now. This maybe is developing into a channel-like structure. Potentially. Monitor that. I'm just gonna hide it for now. All right. So weekly is coming up on this risk line. It looks, again, positioned pretty well to make a break attempt here. Again, see, this is the kind of pullback that you want to see from a risk line or any kind of support or resistance, right? That's how you know it's still strong, right? Like, see how it pulls away from the TD resistance. That's what you want to see. Pulls away from the risk line, but not much, and then collapses. So this is what I'm talking about, right? Grinds the risk lines, consolidates right around the risk line, and then the more we do that, the more likely it is to break. All right. See, pulls away. All right. So just a psychology kind of thing. All right, so last weekly higher low here was at 22.29. No sign of weekly consolidation yet. The daily chart also just healthy, stair stepping up, right? Higher highs and higher lows. Just right in the 8 EMA, just gave it a little tap and go today. Typically a good look for bulls, although the slope of this move is rather fierce. So just a little word of caution there. And this definitely looks like a bit of a 4-hour head and shoulders maybe setting up, or even kind of like a wedge. Not a huge red flag or anything, but just something to be mindful of. Something to carry forward. Think about it. Don't forget about it. You basically just kind of always want to build both cases, right? Like you always want to build a strong bull and bear case as best as you can, and that way you can more easily determine, okay, well, which side has more conviction, right? All right, so daily higher low is trying to be set here at 37.12 over the last higher low of 33.50. In order for us to be confident that that is set, we just going to check the hourly chart to see if the bulls have changed the trend, and they have not. And so if the bulls can defend this low of 37.12 tomorrow and break the higher highs over 40.13, they'll change that hourly trend, and we will just look for some more daily bounce follow through on Workhorse. Just kind of grinding up. Grinding away. You can see the wedge a little bit better on the hourly resolution. I don't know why I said it like that. Solution. Okay, so bit of a wedge shaping up. And ideally, if you play this bounce, then hopefully you took some profits. Hopefully you took some profits, because that's more than enough range to do so. And now you can be potentially swinging the rest. All right. I think that about covers it for Workhorse. XPEV. Starting on the macro chart monthly, probably looking at another inside bar today. We're probably looking at, this month, we're probably looking at another monthly inside bar. Weekly chart, affirms that, right? We're just kind of in this EQ. So right now the weekly is rather in play, right? We're looking for a higher low over 37.50. Bulls are trying to set it here at 45.60. In order for them to do so, they'll have to change the daily trend, which there's no shot. They've not done so yet, but we just got a bear break with very minimal fall through into a bounce. And so the bulls now just want to maintain this hourly trend. Well, let's first see if they even have the hourly trend, and they don't. So bear break into a nice big bounce. Lots of room now. Bulls must defend 45.60 tomorrow and break to higher highs over 48.35. in order to change that hourly trend, set that daily pivot, and have bears scouting for a lower high under 60.04. Okay, so just looking for this EQ to tighten up for XPEV, and just looking at this volume distribution, I wouldn't be surprised if we came up here to test like the 54-ish level, where this volume like just kind of gappy. All right, so we were watching out for that potential head and shoulders look, but we're in this EQ, so I kind of care more about that. We don't need more. Not a very inspiring bounce out of that. I think that should keep this level. Just the mid level, right? Well, we can just keep our eyes open for it. All right, so looking for this EQ to potentially tighten up. But okay, not doing anything. Not doing anything. Okay, this monthly chart is really strong. Like I know that we're in this prior consolidation structure here, and typically it's very hard for price to move through it, but the dollar volume here is like almost non-existent. You can hardly see it compared to the volume on the way up. So I don't know how much I care about this stuff right now. It's not really a time thing for me. It's more of a volume thing for me. And the weekly chart looks like a potential bull flag for plug. ADMA is coming up to catch up. TD looks good. Daily chart just straight up sideways, right? So very healthy look for the bulls, especially after this big move up. Okay, so while the plays, again, whenever a range bound, I really only care about the range plays. Those are the best plays, in my opinion, to make, and so that's really it. So ideally, you can get hourly oversold down here and hourly overbought to make short plays up here. But any short plays, again, I'm much more bullish this sector than I am bearish. So personally, if I was looking short, it would really just to be hedging positions. Which plug? I wouldn't, for me at least. Not big enough anymore. Okay, so that's pretty much it. If I don't really care about the daily trend change. Honestly, it's not very meaningful to me. For given the context of this, pennant like pattern or whatnot. Okay, so hourly oversold into here, hourly overbought into here. That's it. Okay, ZAIR, kind of interesting. A little salty. I missed this. But it's all good. And at this point now, I think what's likely to set up is a daily EQ. Just checking the macro charts real quick. Everything looks good. Here's that grind again, right? Yep, there's that grind again. So I wouldn't be surprised to push up to like the 93-cent level if we're able to get this close over 81 cents. Yeah. So I think a daily EQ is likely the most likely scenario from here, just given the range of this move up, the move down, and then this response move again. So bulls are looking for a daily high or low. Anything over 60 cents will be one, and ideally we'll get a bottom fishing play with like hourly oversold conditions, and we would potentially be losing this channel structure, but price did pop back into it, so I'm gonna leave it for now. But this is one of those situations where I kind of feel like they have a good chance of making their way back into this channel, in which case I would just extend this out. I need them to prove it to me though. I don't need this stuff for now. I don't need this. Okay, so daily lower high looking like it's potentially set here at 79 cents. Check the hourly trend. Hourly trend is not bearish. Hey, I forgot about this volume business. Okay, I hate this. It's too choppy. It's not worth it. So I'm just gonna stay on the daily. Yeah, hourly oversold into down here. Oh, I guess I should check the hourly oversold condition. It would come up to meet it, yes. So I would be fine with these levels. Maybe if you want to be a bit more, I wouldn't. I think that's fine. There are options? No, that can't be right. Wish I had a better vehicle for this. Anyway, that about covers it. Thanks for tuning in, and I will see you all soon.